Hello and welcome to Trade of the Week. I'm Zinati Kuma, and joining me for technical analysis on Naspers, Anglo American Platinum, African Rainbow Minerals and Mondi is founder of Herenya Capital, Petri Redelinghuys. Thank you so much for your time, Petri. Now, you know I cannot just go through the stocks without picking your brain on Trump's inauguration yesterday. And I was actually looking at the markets, and you'd think that there'd be panic, but there isn't. We're just talking off air that the rand at some point was at 18 rand 55, and even now it's 18 rand 65. So it's like 10 cents weaker.
So it's a bit on the
is calm.
Yeah, it's a bit on the back foot today, but compared to yesterday, I mean,
yeah,
it got strong yesterday. I think the market. Man, the playbook is working out. We spoke about this last year, right?
Yeah.
We see interest rate cuts, we see Trump win. The market
Yes.
takes all of these things as tremendously positive. You can see that response coming through in the rand as well.
Yeah.
It's risk on out there, I think. So the US markets will open, this afternoon,
Yeah.
right? I think this doesn't go out live, so I think by the time you
Yes.
see this, the market's already open, and my call is that the markets in the US will be quite strong.
Yeah.
For the day, I think that markets are going to see this as tremendously positive. And one of the first things that he did is he spent a huge amount of time rolling back executive orders that the Biden administration had done.
Yeah.
So, the man keeps his promises.
So that we know. He says something and it's definitely going to happen.
Yeah.
So, and of course, one of the things that we have all been looking out for is, how he deals with geopolitical tensions. And he has spoken about tariffs, spoken about China and just tightening things over there.
Yeah, so that's causing a little bit of drama and a little bit of fear, I think, because a lot of countries, including ourselves, it's like you have to. Sorry, I'm touching the microphone.
Yeah.
You have to make a choice.
Yes.
It's either us or them kind of thing, which is, I think, not a very kind position to take. Kind is maybe the wrong word, but it's not a very political position to take.
Yes.
It's not very balanced. It's kind of drawing a line in the sand, which some countries and people might not necessarily like. But yeah, I mean, he's a strong leader, and I think markets are going to respond positively to that. Again, a bit of a word of warning. It takes the market a little while to realize that, hey, we're getting interest rate cuts because this is actually a bad thing. So that is still the larger scale sort of or longer term roadmap that we've been speaking about for quite some time now. It takes about, sort of 6 months from here, I think the market starts to go, wait a minute, we're cutting interest rates because the economy is slowing down. So unless there's fundamental changes in the economic sort of activity levels that we see in the US on the back of Trump, changing some of the rules and repealing some of the executive orders and that kind of thing, I'm not 100% sure that we're like out of the woods, if you would. But for now, the market is cheering it on, man, and the market's going to rally, and our job is to follow.
I don't know, hey, because at the beginning of January, Naspers and Process and Tencent weren't in a good mood. And I mean, just talking about how markets have been responding to some of the things and the policies that Donald Trump has been implementing. We did have now Tencent being included in a US military list.
Yeah.
And we saw a lot of value being wiped out of Naspers and Process, and actually that is the first stock that you're talking about today.
Yeah, so I mean, also interestingly, the TikTok ban.
Yes, that lasted for like 2 seconds.
Yeah, well, I mean, they found a way around, I guess. I think the idea here is the US is taking its own security seriously, and that they're saying, look, we're putting our people first. And if
Put America first.
Putting America first, and if that is bad for other people, then so be it. But America's putting America first. So I wish we would do the same in South Africa. But anyway, so yeah, looking at Naspers, as you mentioned, it did fall super hard at the beginning of the year. It left this nice big fancy gap over here, and we've actually added some for our managed portfolios. So we've been buying in this region here, and we think that we probably see a little bounce all the way up. I mean, over the longer term, we have a nice uptrend. We have a sort of a pullback in that uptrend. It's not necessarily, it's on the back of this catalyst that we saw. But this we think is a nice little buying zone and a space for us to bounce from here. So we've taken a position. So for the record, I'll disclose we've taken positions in all of these stocks. So we're absolutely talking our book at this point.
All right.
But we are long Naspers, and we are long sort of from around these levels. So we're happy to hold it for 4,300, perhaps 4,400. We'll see how high it bounces.
It's been very interesting to see how investors have reacted to this regulatory shift, and I don't know, to me it seems that Tencent is always at the center of some kind of regulatory change or shift, whether it's domestically in China or whether it is with the US. And judging by how much the market reacted, do you think that they just had not, factored in all of the risk when it comes to that? And actually, what do you think the sentiment is now? Do you think that it's done, it's baked in?
It's hard to answer that. It's hard to say like this is exactly what the market thinks or believes. I mean, at the end of the day, the market responds or is a representation of the beliefs of millions of people.
Yeah.
And particularly, in some cases, some very large fund managers, right? But essentially, we feel that Chinese tech is undervalued compared to US tech. US tech companies are fantastic. Apple, Netflix, Tesla, Amazon, Alphabet. These are big mega corporations, right? But so is Tencent. And Tencent finds itself in trouble a bunch of time, or at the, on the wrong end of the regulatory stick, but it's a mega corporation. It's massive. It is the biggest internet company in the East, right? It's comparable to something like Amazon. It's comparable to something like Google, because it really does operate in that sheer sort of scale, right? So of course there's going to be regulations that impact it on all sorts. It has hundreds of different, types of revenue that it generates. So our feeling is that the tech sort of movement that we've seen over the last while, and this has been our feeling for some time, and sometimes you're wrong for a little bit before you're right.
Yeah.
But our feeling is that if we look at US tech companies, they've run extremely hard and they've been pushed to valuations that just honestly aren't rational. And if you compare that to Chinese tech, we think that there's a lot more value in Chinese tech. So we would our investment focus is currently sort of energy, resources, China tech.
Okay.
Over the US tech stuff, the Magnificent Seven, everybody, you can't get enough of them, they only go up. And then everybody's invested in these things at some point. And yes, for those who are not invested in that, you underperform for a while. But we'd rather underperform for a while and protect capital than be invested in stuff that, could pull back 50, 60% and, it only then would be valued fairly.
Yeah.
Right? So our view is that the sort of Chinese tech is the way to go, and we'll express that by taking positions in Naspers and Process both. And we took this as an opportunity to get good entry prices, right? I mean, it fell pretty hard. It's bounced a little bit since then. It was sub 3,600 at one point.
Yeah.
It's bounced a little bit since then. We think it has quite a bit more upside to go. I mean, even if it just comes back to this longer term moving average over here, which I'll show you is a 89-day simple moving average, this green line over here. Even if it just comes back to that, that's quite a bit of upside to be had here. And as you can see, it has quite a strong relationship with this 89-day moving average, and it is trending quite nicely. So we think that the trend here in general is up.
Okay. All right. Well, let's go into resources. Anglo American Platinum, you spoke about a large fund managers. Are large fund managers actually looking at Amplat at this point? Because it would seem like there are more sellers than buyers.
Well, I can't talk for the largest, massively massive institutional guys that are, mega billions, hundreds of billions. But I can speak for
about
us.
Yourself, okay.
For the little guy out there. We're definitely looking at it. I mean, okay, yes, we're buying into, this is definitely a downtrend, right? If you look at this graph. But what we're starting to see, at least our perspective is here, a bit of a flattening out of this move. And this 560 Rand level is being quite a strong support. It did kind of break down through the bottom, but recovered relatively quickly. It's trying to break through the bottom here, so it's not an exact.
Would you say that
level.
That's kind of like it's been going through kind of a consolidation?
This feels like an accumulation phase, yeah. So there's four, let's call it 4 phases in the market, right? Accumulation, where the stock would go sideways for a long time. Then there's a rally period, which is still accumulation. So the smart money really kind of gets in the beginning, and then the rest of the market kind of chases it. And then you have this distribution sort of pattern, which is generally the inverse of what we see on this chart, which is a long period of sideways at the top of the chart, and then distribution as the price comes down again. So it's really 2 phases, I guess, broken into 4 sub-phases.
Right.
And we think that this is the beginning of that accumulation phase, where we're seeing essentially the stock go sideways now. What is this for, since August 2023 to now? Okay, yes, it's a little looks like it's a bit of a compressing trend, but we think that this is the beginning of a phase where we could see a bit of a return to rally. And I think also, we'll bring Trump into this. I think Trump is symbolic, more than anything else, in the sense that the pendulum swings from one extreme to the next, right? And I think people have gotten to a point where the ideals that are currently pervasive in the world are fine, but we've had enough, right? And I think that we've seen a huge push into EVs and all these things on these sort of ideals, which at the end of the day, the world is going, well, you know what, EV is not all that reliable. I want a petrol car, I want a diesel car. Or a hybrid or whatever the case. And platinum is a key ingredient into catalytic converters, into that whole industry, and I think the world kind of went a little bit too far to the, let's go green, let's do this, do that, and the pendulum might swing very hard on the way back, right? So I think that in that respect, good old-fashioned catalytic converters to strip pollution out of cars or petrol engines is going to probably make a comeback in a relatively big way.
All right, it's going to be quite interesting because there are a lot of returns that investors gave up in this period of this downtrend in the PGMs. So it's going to be quite interesting to see then the way up and hopefully the beginning of the cycle to the upside. Let's take a look at another resources company that you are looking at, African Rainbow Minerals, which is a little bit smaller. What are you seeing there?
So again, we have this this bottom of the trend. I think there's a bit of a theme for today, to be honest, which is bottom picking.
All right.
Except for Naspers. Naspers is in a nice, I'll just show that chart again. Naspers is in this nice little uptrend.
Okay.
So we're kind of just buying into the pullback. The rest of the stuff, we're trying to buy at the bottom of the chart, right? So trade with caution, I'll say. At least if we look at ARI here, or African Rainbow Minerals, what we can see is what seems to be a bit of a double bottom type situation. Now you can count all the times that this trend line touches and call it a triple bottom or quadruple bottom, whatever you want to do. At the end of the day, we've got a major bottom here, a bit of a bounce, and a major bottom here. One would say that this could potentially be a head and shoulders, right? However, head and shoulders at the bottom of a trend line doesn't necessarily always play out. They're very strong at the top of a trend line. If you had an inverse head and shoulders here, that would be valid. At this stage, it is not, because since it is at the bottom of a downtrend, so it doesn't really count. So even though that pattern is there, very clear to see, in this context, it doesn't necessarily count. So what we look at here is this is potentially a double bottom or a W formation. So we get this leg down, a bounce, makes the inside of the W, a bounce again, and then out, right? Or also known as a double bottom.
All right.
So how you would target that, for example, trying to figure out which tool to use. Not that one. Let's just use a regular line. So we would basically read that structure over there. Come on, click. And then target that out.
Okay.
Right? So then you would look at a target of approximately 335.
Quite some upside.
So that's quite a bit of upside. I mean, that stock basically doubles from here, more than doubles from here. And you've got essentially a stop loss under, call it, I mean, you can even put your stop loss under 140.
All right.
So you get an entry here at sort of 156 at the moment, call it 160, with a 20 Rand stop loss and potentially 160, 170 Rand of upside. I think this is a fantastic trade. And it's one of those things, again, where commodities have been so under pressure, and if Trump comes in and Trump, does really stimulate and boost the global economy, minerals are going to do relatively well. So that's our sort of view for the year, and I think that, well, it has been for some time, to be fair, and I think that this is a fantastic opportunity to get into something with an almost incredible risk-to-reward ratio, right?
All right. Well, let's get into paper and packaging, Mondi. It would seem that last year it actually underperformed SAPI. SAPI was like a firm favorite, but Mondi was just lagging for the longest time.
Yeah, we can actually do a little comparison to that if you like.
And it's actually quite interesting because, I mean, SAPI, I feel like, has been the more volatile one in the recent past, where people were kind of unsure, but it's actually quite interesting, the shift that happened last year.
Yeah, okay, there we go. Internet is a bit slow here, guys, but okay, let's have a look. SAPI, I'm just going to go.
Yeah. And a lot of people actually, even like the veteran investors, would talk about SAPI being quite a great company back in the day, but
not quite what it used to be. So let's look at 1 year sort of data. So we can see that SAPI, being represented by the pink line here, has outperformed Mondi by some margin, although itself hasn't really done too well. To be fair, it's up 17.5%, while Mondi is down 20%, right, or 19.8. So you could probably take a pair trade here. You go long Mondi, short SAPI. That would be your market neutral sort of lower risk position, and you could be kind of quote unquote betting on the ratio between the two, you know, returning. Alternatively, if you look, let's have a look at what it's done over 5 years. Over 5 years, that ratio is about the same, and you can say there's a 5-year long-term correlation between these two. It doesn't always. It can spend years out of sync, touch a little bit, out of sync, touch a little bit. So you could probably take a fairly safe pair trade here. On a 5-year basis, Mondi's underperformed by, well, call it 27 or 26%. So SAPI up 17, Mondi down basically 10. So that's quite an interesting little comparison. Thank you for highlighting that.
All right. And now you're calling a bottom with Mondi.
So just to have a look at Mondi in itself, we again see this little support level at, call it 265, or the zone around 265, 260, or whatever you want to call it. And we're kind of looking at this bounce probably up to this consolidation area here. So we're looking at about 330, 340 is a potential upside with a fairly tight stop loss. You could probably stop loss under 260 or 255, give it some space. As you can see, big institutional guys do this kind of thing because they can. They know that there's stop losses on this level. They know the traders are going long off this level, so they'll push it through that, collect all the stop losses, and the stock will bounce. So don't put your stop loss at the obvious place. Give it a little bit of breathing room, right? But in any case, again, we feel that if you look at a weekly chart here, for example, if we go back to this weekly 89-week moving average, we're looking at 320 as a potential target. So that's quite a bit of upside for a relatively low amount of risk. And we can see that even in the long term, this level has been a relatively strong support. You know, all the way back since sort of, what is this, 2015, 2016. So again, it's not a perfect level. 265 is the key support. It's punched through here a few times, but it hasn't really spent a significant amount of time underneath there. So that's why it represents to us a good potential entry point to kind of just trade it back up to the recent highs. If you make this like a channel, let me just get another line in here. You could probably do that as a channel, as a conservative channel. So you're basically trading this range, right? So we like that as a trade. We think that's a decent risk reward, and it's something that we can get behind.
Awesome. Thank you so much, Petri. Really appreciate the time, and of course for giving of your time in January, your first trade of the week for January. That was Herenya Capital's Petri Redelinghuys. That's where I leave things with you, but be sure to stay tuned for lots more coming up right here on Business Day TV.